It's time freedom. I can do what I want, whether it generates money or not, fundamentally. Yeah, that's really it. It gives me options. I
Yep.
can work when I want to, or I can take off when I want to, and you have this money rolling in, whether you're working or not. I've observed that most people, they continue working. Obviously, we need to be productive. In fact, I would almost observe that they work harder than they did in their job before, and that's because they are working for themselves and they're building wealth.
Hello, everyone, and welcome to the Moeller Real Estate and Business Podcast. I'm your host, Phil Moeller, and on this podcast, we will be interviewing guests that have made their mark in real estate, in business, and in other areas of life. Listening to podcasts myself has helped me in so many different ways and continues to do so. If you're a real estate investor or an entrepreneur, or aspiring to be either, or just someone that wants to learn, you've come to the right place. An easy way to have an impact is to share this episode with friends or family, provide a review, or just spread the word. We greatly appreciate it, and now let's get to the show. Hello, everyone. Welcome to this week's episode of the Moeller Real Estate and Business Podcast. Very excited for this week's guest, Michael Blanc. Michael, how are you doing today?
Phil Mello, good to see you today.
Oh, man, you did that, didn't you? So we were just talking about our roots and our German heritage. And I was like, there's Moellers, there's Muellers, and then he said it like that. I'm like, yes. When I was in the corporate world, that's how the Europeans, that's how they would say my name. But then I tried to repeat it, and I can't do it. So I'm just Moeller, and you can call me whatever you want. So I appreciate that, Michael. I'm going to introduce Michael, the Michael Blanc, by the way, CEO of Nighthawk Equity, host of the Financial Freedom with Real Estate podcast, having a huge impact on a lot of people in the financial freedom space. Also has a book, wrote a book on it, selling a lot of copies, just doing great because it's impactful. And this is real stuff. And, I think freedom as a general topic is really important. There's a lot of depth to that. One of those is financial freedom. We'll talk about that. But I want to hear a little bit about your story. You're doing a lot. You're obviously a real estate investor, and you're doing some great things there. You're educating a lot of people, but it didn't all start here, right? So how did this start, and how did you get to where you are today?
No, I was born this way.
The hair and everything.
My hair, everything. Yeah, I have a kind of a traditional upbringing. I was taught to go to school, get good grades, and get a job with benefits. And that's what I did. In my case, I have a master's of computer science. Phil, I'm highly educated, which I then threw away in 2005 when I read Rich Dad Poor Dad. And I had joined a software startup in the late 90s. That company went public and put a bunch of money in my pocket. So I went and read the Purple Book. It threw me for a loop. I was confused for a solid 3 months. I decided to quit my job and pursue financial freedom. And so I flipped houses. I traded stocks and options. I took a commercial real estate investing class. I had a rental. But my big idea was to get into the restaurant franchise business. That's what you would have done in my place as well. And had bought a 10-unit territory, hired a guy, started buying, building, and then everything went well for a couple of years until the recession hit. And then it stopped working so well, and the restaurant started losing money, and I realized I needed to sell. I let my guy go. Now I was running 6 restaurants, and I couldn't sell the damn things because it was a recession, and they were losing money, and no one's buying a money-losing restaurant. I then remembered my couple house flips I did and decided to bail myself out by flipping. So I started using hard money and started flipping while I'm running these restaurants, then eventually try to sell them. I'm flipping these houses, which was a ton of work, and I'm working like 80 hours a week. And in 2011, I accidentally got into an apartment building, and I remembered my commercial real estate boot camp I took in 2006 and took a swing at it, and it was kind of a nightmare, the whole thing. Because I had trouble raising money for it. I had the wrong property manager. It was in a pro-tenant state, and I had a professional tenant. And I literally, to this day, made more mistakes, had more things go wrong in that my first deal than all of my 2,500 units since then. It's wild. And immediately regretted getting into it. But after about 18 months, it started to calm down and started sending me mailbox money. And that's when the light bulb went off, because apparently it takes me a while. I'm a slow learner. And I was like, my gosh, maybe I should stop owning this flipping stuff and start pivoting to actually apartment buildings. And that's when I started blogging about it. I started creating content around it. I started creating courses. And today we have coaching and things of that nature. We're one of the leading authorities on how to teach that thing. And we also buy stuff. My investment company is called Nighthawk Equity. We have about 1,800 units worth about $300 million. We've exited a few since we've gotten started in 2017. And here we are today. My message to the millions is financial freedom with real estate, but maybe not in the way that you think.
Okay. Well, there's a lot there, and I want to go back to one thing is you talked about is you bought that first apartment, and I just think taking action, taking the first step is so important. And you bought that with the idea that that apartment was going to deliver you probably financial freedom really fast because the classes and courses and what you heard and everything else. You didn't buy that with the intention of it's going to take 18 months. It's going to be really, really painful. I'm going to learn a ton of lessons. You didn't buy it with the intent of education, it doesn't sound like, but you regretted it after 18 months. I don't think you regret that first one now. Is that correct?
Of course. Yeah, of course. In hindsight, you would never do that first deal again for many different reasons, but it has gotten me where I've gotten, right? You got to start somewhere.
Yeah.
So in that sense, I don't regret it. No. And every time something like this happens and there's a setback or challenge, you really don't enjoy it, but there's always valuable lessons in it.
Yeah. And I think one thing when we're taking action and trying new things, first of all, be smart about it. Like don't just do ridiculous things. We're not saying that, but realize that when you're doing different things or taking some risk, there's just do it for the potential financial return, but also recognize when you're doing new things, you're going to learn a lot through that process. It's going to make you better. And it might, even if it costs you a little bit of money now, it might save you money long term. So that first deal and doing that first deal had a lot of impact on you. So after you did that, you started writing, blogging. How did this roll out over time? Like what were the next kind of big moves or pivots?
Yeah, I mean, so I just started blogging about it on the BiggerPockets and et cetera, and created a bit of a community where I was interacting with people. And what happened is people were starting to bring me deals and they wanted to partner with me. And then people wanted to invest with me. So I started doing probably the first 10 deals we did in those first couple of years were all joint ventures.
Okay.
And that was great. I wouldn't do it in the same way again. Again, it got us started, but made a lot of mistakes by doing that. Number one, first and foremost, these deals were all over the place. So it's not like, oh, let's go deep in a particular city. No, it's like, oh, Birmingham, Chattanooga, Huntsville, oh, here, everywhere. And it does not really allow you to scale. Number two, I was partnering with students at the time, and, the level of competency engagement varied widely. And so here you are, trying to actually manage a property with the understanding that this other partner is supposed to do certain things, and they never do, which is why 2 years later I stopped doing it. I was like, this is horrible. And that's when and people are like, oh, you partner with me. I'm like, no, I'm not partnering with you because you're probably going to be a knucklehead. And we stopped doing that. And but again, it things like that gets you started. And the first time around, the first deal you do, I would say, yes, you should have your criteria, but you should be a bit opportunistic. As you start adding deals, you start kind of what's called build your buy box a little bit when you start adding criteria and you become much more specific so that it becomes more of a cookie cutter process.
Yeah, I think there's actually a lot of people that try to be maybe they're trying to be too niche and not opportunistic, so they miss deals where getting into a deal the first time that can have a big impact. So you said, okay, I don't want to partner with students anymore because they're knuckleheads or whatever. But now you're talking to some students, you're talking to people, right? They're trying to, they have a house, they have 3 houses, they have 5 houses, they have a couple duplexes, maybe a small multifamily, but they're trying to make the next move. But there's, the barriers to it. They don't have the finance, they don't have the money behind it, or they don't have the partners. They don't know how to find the deals. Like, what should they be doing to get to that next level? How do you coach your students to make the next step?
Well, you identified the person precisely. These are people who already have some rentals and some flips. And so they understand the benefit of the real estate, but they also understand the problem. And the problem is, how do I scale this thing without working more? All right. So they intuitively understand that. And there is no solution to the problem unless you get into multifamily. And that's really what I'm trying to tell people. And like you said, there's 2 main objections when that brings up. People in general think it's an advanced strategy that requires us years of experience and millions of dollars in the bank. And it just doesn't. It doesn't. And you don't actually need years of experience. We can overcome that within 30 days. And you don't need millions in the bank because you're going to learn how to partner and raise capital on that. And so the good news is that these are all things you can do in 60, 90 days, and you can appear as experienced as someone who's got, a decade of real estate investing experience because, you're using the right words. You have you have a team around you. And there's really 3 things fundamentally that you need. And you don't need them quite as much on the single family house because it's a little easier. But you really you got to follow a system, some kind of blueprint or roadmap that tells you what to do in what order. Then you got to get the right support around you. You need a peer group, and you need someone experienced looking over your shoulder. And then you need to tap into a network. And that network better have access to deal flow and capital, right? And all through partners. Partnering is huge in multifamily. It's very almost a natural act not to partner.
Yeah. Well, and I was just looking. I mean, you called it, I think, on your podcast recently, the three accelerators, right? So you just talked about this recently, and you have system, support, and network. And I think those things are so important. If you don't have the experience, find someone with the experience to help you with that. And then with multifamily, with the capital raising, whatever it might be. But these are like you can do this. Like I kind of did this the slow way, right? I didn't partner for a long time, so I bought a house and then I bought a house and then I bought a house, and it took me. I'm a slow learner, so it took me a while. But then when I started to partner and doing things a little bit differently, there's def and like I can relate to all these, the systems, the support network, all those things eventually became accelerators when I realized that they could be accelerators. So now our listeners know, okay, hey, these are the accelerators, and do these things. What else? So you went from partnering with students, joint ventures, syndications. Like what were some other just shifts or things that you like ahas that you made in your journey?
Yeah, so early on, it was in 2018. We put a $1.6 million deal under contract. I had built. This is now 2018, right? So I've been building my list since 2014. I had a pretty sizable list. I was putting out content, and I was like, well, I'm going to do a webinar, and I barely raised the $650,000 that I needed. I mean, it was wild, eye-opening, and I was like, what is going on? Why are people not investing with me, right? And it's because I was speaking to the active investors. I wasn't speaking to the passive investors. They get on my list and they're like, I don't really want to find deals. I just want to passively invest in them. So I'm not talking to them. So they start ignoring or unsubscribing or whatever the case may be. So I had a disengaged list, number one. So if you're going to build a list, you got to speak to them. That was lesson number one. Lesson number two was, before I tell you what the lesson was, a year later, we bought a $9 million property where we raised $3.2 million. So what happened? Yes, I got a little better at talking to my list, but the thing that was much different was that I joint ventured with somebody. Now today we call them a fund manager. Back day we maybe called them something else, a co-GP or something like that.
Yep.
But this person had the opposite problem. I had great deal flow for my what we called their deal desk at the time, and I was struggling with raising money, obviously. And he had the opposite problem. He had a huge amount of money behind him, but he didn't have deal flow. Just a classic deal finder versus capital raiser, which is why these joint ventures work so well.
Yes. Yep.
And so, he basically raised, I don't know how much, the bulk of it. And so now we own a $9 million property going from 1.6 to 9 million. And this is how people scale. Yeah. It's how people scale, leveraging all those three things we just mentioned earlier. But a key component is in the network part is joint ventures. It's absolutely critical.
And I think with anything, it's what are you good at? What are you not? Not only that, what are you good at? What do you enjoy? And what are you not? And find out if you're really good at finding deals. First of all, if it's around here and call me if you find a good apartment deal. Like I can help raise the capital and we can run the deal, right? Like we're doing all three. But if you're just good at one of these three, if you have access to capital, first of all, if you have access to capital, you need to be really smart and careful about who you partner with to make sure you're protecting that capital, of course, and it's a good investment. But if you're really good at that and you have access to capital, then you need to go find the people that have the deals or that know how to operate. So find out what you're good at and then identify what you need, where your gaps are, and find those people that can fill those gaps.
Yeah, I mean, that's right. I mean, people may not know if they're good at finding deals, raising capital, because I haven't done either yet. But it's normally a personality thing. And like you said, what are you good at? What do you like to do? But also, what is your personality type? If I just look at the deal finders, okay, deal finders are, they're more analytical, maybe engineers of some sort. They're more numbers oriented, more detail oriented, and that's very important for deal finding, due diligence, and even for managing the asset. The complement is, of course, the capital raiser personality, and those are more relationship-oriented. They have no problem maybe talking to people they don't know. They probably have some kind of sales background or so, and they really don't like numbers that much at all, right? And so that personality lends itself more to raising capital. And then there's people who can do both. Like for me, I am so confident, Phil, I can do both. But just because you can doesn't mean you should. There's only so many hours in the day.
Right.
What happens is there's some people like me who do everything, but then you're spending 1 hour finding deals and 1 hour raising capital. What if one person all they do is talk to brokers and deal flow, and the other partner, all they do is talk to potential investors? Yeah. That is where a partnership, where 1 + 1 is far greater than 2. Yeah. And this is the missed opportunity that people have who think they can do both. No, pick one and then partner on the complement. And the good news is the divorce is already built in with syndications, because if you don't like the other person, well, you don't have to do another deal with them, and you basically go apart when you sell the deal. It's already
Right.
the prenup's already signed.
Yeah,
Right?
I love it.
So
I love it.
It's much easier to partner in this business because of all these things versus like, hey, let's you and I buy a car wash together, and then a year later we decide we don't really like each other, or you're lazy or I'm lazy or whatever, and now you're gonna figure out how to extricate yourself. But the exit is already built in.
Yep, and I think the other, like if there's someone less experienced, or like if you have a couple of houses or duplex or whatever, you're starting to figure out what you're good at. But if you don't know how to find the capital or how to find the deals, like you're not good at either yet, don't try to do all of it all at the same time. Go pick one and find that partner, and then it'll accelerate both of your journeys, right, to get to financial freedom, which is what I want to talk about. And so you're convicted that multifamily real estate is the best path, I think, to financial freedom, as you said it. I can obviously relate to that, and it's been great for me. We've been so blessed and so fortunate in so many ways. But like, what is financial free? Like, let's start there. Like, what does that really look like? Like, define that for me.
You mean the end goal, the outcome?
Yeah.
Yeah. I mean, look. I mean, to me, it's time freedom. I can do what I want, whether it generates money or not, fundamentally. And yeah, that's really it. It gives me options. I can work when I want to, or I can take off when I want to. And you have this, this money rolling in, whether you're working or not. I've observed that most people, they continue working. Obviously, we need to be productive. In fact, I would almost observe that they work harder than they did in their job before, and that's because they are working for themselves and they're building wealth. The temptation becomes that you work too much, because the more you do, the more money you can make, and that is very attractive indeed. And so some people forget the whole reason they embarked on this, and they did a deal, they did a second deal, quit their job, now they're full-time real estate investors. But they really haven't achieved financial freedom yet because they're working harder than before. And so how do I now build a company that literally allows me to enjoy the fruits of my labor? And so that's a bit of a shift, but it's another problem at another level. Most people, when they stop working or they stop flipping or whatever, the money stops flowing. And that's not really financial freedom. And to me, what I like about it is there's different levels of financial freedom. There's level one, which is kind of like just covering my bare living expenses so I can quit what I'm doing and focus full time. But I can scale this thing. This is what I love so much about it. I can scale this thing almost to infinity without working harder. And that's what I don't like about some of the other strategies like flipping or rentals or anything like that, is the only way to scale is really to work harder. And it's because I tried both, and it's just a lot of work. Where multifamily, yes, there's a bit of work when you buy it, but there's also a bit of work when you buy a house or whatever the case may be. The difference is now I put a property manager in place, and yes, for 90 days, I have a lot of interaction with the property manager, stabilize the property. But after that, things typically quiet down. Correct. And then you do it again. So theoretically, you could do 3 or 4 properties a year without working any more, right? Yeah. And so that to me is very attractive.
Yeah. And so you talked about just like time freedom and do what you want when you want. And I think the more clarity someone has on what they will do with that time, the better. But also recognize you might not have that figured out. If you have the motivation to get to that point, you are probably not going to go sit on a beach 24/7, 365. You're probably not going to do that. You might go to, like, I can do that. You might go do it for a week, and you're like, I am bored out of I got to go do something.
I've done it. Retirement is totally for the birds. Like my partner Garrett did. He told that story on my podcast the other day. He was like, my goal is to sit in, where is it? We want to go to Thailand and drink Mai Tais on the beach, right? And he did that for a couple of weeks, and it drove him crazy. I took around the world. I had a 3-month sabbatical back in the software days, where they're looking at 3 months off paid, right? Because this is a software company in the late 90s, right? So it was wild, man. I felt my brain literally slowing down after about 4 weeks. And I was starting to sleep like 10 hours, 11 hours. You don't turn the alarm on. I was sleeping longer, and I felt my brain slow down. Like I literally became dumber, I think. And I was like, oh my gosh, this is really bad. Like I need to do something. It was like I enjoyed the travels, one of my favorite things to do. But I was like, okay, I can't continue doing this because I need something productive to do. But I don't need it or want it all the time. And so it allows me to balance that.
Yeah. And that's hilarious. And there's probably some health benefits to the slow down, but then it's like, okay, this has been enough, and we're going to go back. And I think what you found too is you were blogging, you were doing other things while you were building your real estate portfolio, But I think you realize your passion is your passion buying and building your real estate portfolio, or is it educating others to get them to this financial free? Because I think you're working like you're energized by what you're doing clearly. And I think there's just a process of figuring this out for all of us, like what that really is.
If you put a gun to my head and you forced me to choose, I would choose the educational side. It's more fulfilling to me, but it's also harder, and you could argue not as profitable than buying apartment buildings. And I'm doing both just because I can. There's a lot of synergies, right?
Yeah.
So if I'm going to teach it, it gives me certain access, but it also gives me the knowledge to do it as well. So they really, in my mind, they'll go hand in hand.
Yeah.
It would be irresponsible in my mind just to buy apartment buildings and not tell others, but it would also be irresponsible it would be hypocritical to teach how to do it and not do it yourself. And over time, the real estate business, I don't know how scalable the educational thing is. I don't know. I mean, I'm in the process of trying to find out.
Yep.
We're trying to scale up our Facebook ad spend, things of that nature, so we can get the message out to more people who may not be thinking multifamily right now, but they got real estate portfolios and they want to scale. But what I said earlier, the main advantage of multifamily is you can keep doing it. Now, obviously, as the market allows, but if you just keep doing it, all you need is consistent deal flow and increase larger and larger amounts of money through a larger online presence, through fund managers, variety of different things, institutional investors. So in other words, if you simply continue spending the same amount of time that you did last year, but you leverage what you learned, you just keep doing and keeping it forward, you're able to build a very large portfolio by hiring people as it allows. You can build a very large portfolio without actually having to work harder.
Yeah. Yep. So I want to come to that. I want to add something and then come back to this passive, active, and even compare it to business a little bit. But just talking about going back to the passion and financial freedom, I think you said time freedom. I think the ultimate freedom, like I've thought about this, I think it's like true freedom of purpose to do what you really feel like you're called to do. And I think a path to financial freedom is an important element of that to enable that. And I think you've done that, and you've really found, and you've found this marriage of education and apartments and doing both, and they both complement each other. You'd be a hypocrite without it. So I think financial freedom is a piece of this that's so important to figure out this thing called life that we're all on. And I think you figured that out. So congratulations. I want to talk about the other element of that. You kind of talked about passive investing, active investing. I don't even compare it to business because I've had this debate in my own mind. Can you scale any business to make it passive? And I think the answer is yes, you can. However, I think multifamily real estate is easier to do that than the others. Probably takes less skill, less leadership skill, other things to do it than building a business and scaling it and setting it up to be completely passive. But there's also the spectrum of flipping houses is very active. Multifamily can be pretty darn passive. How do you think about the spectrum of passive to active business, real estate? How do you think about that?
So within the active investing, you're talking about more passive versus less passive.
Yeah.
I would agree with that. I found it very challenging. We flipped 3 dozen houses. We're buying a house a month. And, if I wanted a 10X that, I don't know what I would have done, right? Or same with the rental portfolio. You get to 5 rental portfolios. You want a 10X that. It's 50 houses. That's one heck of a business. There's very, very few people I know. Maybe you might be one of them. We're able to do it with much effort and achieving much scale, so you can actually hire people to run it for you. It's just not as common. It's much more common and likely with multifamily because you can run $100 million portfolio with probably you and a partner and a couple of VAs. Like we have 6 people on our team, we have $350 million of real estate, right? It's wild. It's absolutely wild. Now, having said all that, I don't think there's any really true passive investment, or there should be not a true passive investment. People say, well, stocks and bonds are passive, and I disagree. They shouldn't be. Most people think they are. We just trust that our financial advisor is going to do the right thing, but they may or may not, right? Why don't you spend a little time like Warren Buffett and actually educate yourself a little bit on the stocks you own? So again, I don't really think there should be true passive income. So I think it's a bit of a myth on the one hand, with that definition, but you can definitely, on the spectrum, you can say there are leveraged businesses and highly leveraged businesses and not as leveraged businesses. And I would classify rentals and flips as in much more active, much less scalable because of that, and multifamily much more scalable because I can do more without actually having to work harder.
Yeah. And I would even say that people think passive real estate, like LP positions, it's called passive. But if you do that completely passively, as in you don't do any research and you just see a deal, they tell you these returns and you just invest in it, you should do your education. Now, I think over time, as you identify those sponsors that you know, like, and trust and do a good job, it becomes more and more passive over time. But the first time you invest with somebody probably shouldn't be, I just trust them. This will probably work out. I'm just going to invest, right?
Well, let's talk about that. I mean, you're absolutely right. I mean, actual LP investing is probably the most passive investing you can do. But again, I'm going back to with the stocks and bonds. I think everybody should spend time making money their business. If you have money and you want to grow your wealth, you've got to make money your business, right? And it's going to be very challenging for you to hit your financial goals just by investing in the stock market, right? I mean, you have a good ride here like we had for 18 months, for example, right? But you could have some downtime as well. Plus, you're paying too many taxes along the way, and you're not really getting a lot of cash flow, right? So I would say if you have money, you want to grow your wealth, then educate yourself around alternative investments in general.
Yes.
So yes, passive real estate, but where does oil and gas fit in? What about a debt fund? What about crypto? Is that a good thing? Should you want to be in crypto? Whatever, right? So make it your business to understand money, and then you're right. It is a little bit more upfront work, a little more.
Yeah.
Yes, you have to now go in. Let's say I want to get into real estate syndications. Okay, I have to learn what that is. What does that mean? How is a deal structured? Like, how do I recognize a good deal? What questions should I ask? Right. So yes, there are some questions, but like you said, I don't need to pick 10 operators, right? I just need one or two. I invest with them. I see how they behave, how they communicate, and I invest the minimum, and then maybe I do it again. And so you do it slowly over time. And now you develop a competency across different asset classes. And then you can start to pull back a little bit. But that's really the people who do that really are able to build their wealth really passively, because these are all high income earners, and it doesn't make sense for them to quit what they're doing. So for them, financial freedom looks different. They want a long-term exit, or they want to build multiple streams of income and wealth generation. And so it doesn't make sense for them to quit their job, which is typically what we associate with financial freedom. But it does make sense for them to generate enough passive income so that they cover their living expenses. It's like, in GoAbundance, we say, what's your freedom percentage? And getting to 100% is step one. That's pretty cool. Right. I have so much passive income coming in that it covers my living expenses. And that's pretty cool. Now, how can I increase that percentage?
Yeah.
And that's where passive investing really comes into play.
Yeah. You also made another good point there. You talked about just the different business owners that are making a lot of money in their business. And by the way, they're probably they probably started that. They're passionate about it. Maybe it's a family business, but they're energized. They're leading a team. They're having an impact on people. We're not saying you have to quit whatever you're doing, no matter who you are. There's different ways to diversify and get into real estate. Passive investing is one of them. So if you're passionate about your business and you're doing it, first of all, if it needs investment and it's doing great, don't be afraid to invest in that. But there's also alternative investing other than just the stock market that people can invest in and just diversify their portfolio. Crypto, whatever the position is on that. I had a debate with someone this morning. Where are you seeing on that? 30 seconds on crypto.
I stay away because I don't understand it. I don't know what drives the fundamentals, and to me, it's 100% pure speculation. I've had a lot of smart people explain to me, and it doesn't make any sense to me, and so I'm going to stay away with it. I don't understand it, and I've tried, so I'm out.
And one of my big lessons from the last couple of years is it's not about crypto. It's about apartments. You know what you're good at. You're going to stay in your lane. You're going to focus on what you're good at, and you're going to have more of an impact through doing that than you are trying to do a lot of different things. Right? Inch wide, mile deep versus mile wide, inch deep.
Yes and no. You're right, because that's my primary business, and I'm still an active business owner. So you're right about that. But I do have some passive investments, so I need to educate myself around these other investments. So if I want to try to slowly diversify over time, take some chips off the table, then I do need to also start learning. And I don't have. And this is the thing. I don't have to be an expert in oil and gas, but I have to be able to read a prospectus and at least ask some questions. And that while the answers may not necessarily make sense to me, in general, do the answers make sense to me? As a common sense.
Right.
Some investors, the biggest problem I think is that people don't ask questions. right? Because if you ask someone about, your rent growth assumptions or blah blah blah, and it's a heavy value add, right? And they're projecting 90% throughout the entire project. Well, how is this possible? They're turning over all these units. You're not going to do that in a day, right? You're going to raise rents. Don't you think your vacancy rate might actually go up while you're doing that? Right. Yeah. So now all of a sudden my occupancy assumptions might appear a bit aggressive or unrealistic. So, if I have 12-year debt on it, which sounds like a good fixed debt, but the plan calls for a refinance in 3 to 5 years. Well, it doesn't make any sense. Did you consider the prepayment penalty? What is that, right?
Yeah.
It requires some knowledge, but more like just start asking questions. And first of all, does the operator respond? Do they answer the questions, or do they avoid the question? And then number two, does the answer make sense to you, right? Because the average LP investor, they're successful, they're smart. Even they don't know a particular asset class, they know business.
Right. But what's interesting is you're finding ways to diversify, leveraging a lot of the knowledge and experience that you have already. Not you studied things more, like whether it's mineral rights, oil, but these are all kind of around real estate, and you're leveraging that experience, and then you're learning more to make those investments versus I'll just go back to the crypto. That's a completely different type of asset class investment, and you don't, that would take a lot of study relative to.
Doesn't matter. So you just read some books or listen to some podcasts or go online, ask Chad a bunch of questions about crypto. If it really is a viable strategy, one should learn about it. And then you can still say, no, I don't like this strategy or whatever the case may be. But, one should know enough about these alternative investments. Every LP passive investor should take a look over these different alternative investments and ask themselves, what do I want this investment to do, right? Is it an inflation hedge? Does it give me tax write-offs? Is it giving me cash flow? Is it giving me appreciation? Is it giving me a combination of all those, right? So you have different investments that do different things. A lot of people, they just do stuff, and they really don't know how it fits. And also, let's talk about a risk-adjusted return. What is the risk of that, right?
Yeah.
The return on crypto could be super high, but where does it lie in the risk spectrum? Well, pretty high. It's pretty much, the highest you can get.
Yes.
Wild rides, right? Very low lows. So looking at your portfolio and figuring out what do I want to do and where on the risk spectrum do I want. So it's not just allocating assets across assets, but also by strategy and objective, and then also according to risk. And the more sophisticated investors, that's what they do. They don't spend hours per week doing it, but they make it a priority.
Right. So for me, crypto, I think enough about it to have a small part of my portfolio in it. We're talking a couple percent, but for me, I am also recognized I'm not an expert on it. So if that goes away, I'm prepared for that. It's still risky. I think it might go way up, but there's still plenty of risk to it. So, and I think the other thing is what is for the listeners, what is your learn from Michael, learn from myself, learn from others, build your investment thesis and build a plan of what your investment thesis look like, stocks, bonds, passive investments, active, whatever it might be, and just start to move towards that, move in that direction, study, do the research for that. But build your thesis and move in that direction is what my guidance would be, I guess. So I want to ask one more question on kind of apartment investing specifically, then I have a couple of closing questions. But you have something called the law of the first deal. I want you to talk about that a little bit. What is that?
It's kind of wild. And the law of the first deal says that when you do your first multifamily deal of any size, you're literally 1 to 2 years away from quitting your job. And it's just I haven't found a single exception to the rule. The first deal tends to be the smallest and the hardest to do for a variety of different reasons. But when you do that first deal, everything changes. Like this giant switch in the universe switches on. And now you're known as a closer. And so brokers that maybe weren't returning the call now are calling you because you somehow got a deal done. The investors who were on the fence before are like, I missed that one. Let's get into the next one. You now have track record. And so typically what happens when people close that first deal, they already have that second under contract. It's literally wild. And so doing that second and that third really happens in automatic rapid succession. And the mistake then that new syndicators make after that is they think that scaling simply is just to repeat what they did last time. And as a result, they not only make a lot of mistakes because they're not really proactively scaling, but they're missing huge opportunities because the business opportunity is a really very large, but only for the people that actually take it seriously and take it for what it is, which is a multi-million-dollar business, and actually doing some long-term planning and making sure that the revenue is reinvested to further grow the business.
Yep. And it's interesting because that law of the first deal, that happened to me on single family. I hesitated a lot, but then when I bought it, all of a sudden I had the next one in contract like a month, within 30 days or so, or 60 days. And then when I finally bought my first, which it took me a long time, but when I finally bought my first apartment complex, then all of a sudden the next one was in contract. And the reality is I could have been 1 or 2 years. Michael, I'm slow. Like I just take a little bit more time. So it would end up being a few more years, but not because I couldn't have done it at all. And honestly, if I would have left my job earlier, I probably would have accelerated things. I don't regret it. I learned a ton from I had a great career. I had a great corporate career. I learned so much from so many great leaders and how to run business and other stuff. But the reality is that law of the first deal for me, it's real. If you invest your time and energy into it, that can be a real thing. So go get that first deal. Is that even a duplex, or you're saying like
just a duplex? Absolutely, yeah. Duplex works as long as you're buying it with a multifamily scaling mindset. It counts. If duplex is just another single family house with 2 doors,
right,
it will not work.
Yeah. Yep. Agreed with that. Well, I want to shift gears to some closing questions, Michael. This is so good, and it just love talking about this stuff. What keys to success, for some, you talked about accelerators, but what would your keys to success be for anybody?
Yeah. Number one, spend enough time to create clarity. I think a lot of people problems, including mine, comes from that. And so clarity just solves a lot of things. Clarity makes clear what you want, what you don't want, and establishes priorities. And once you're clear, if you're really clear, then the only thing that can result from that is action. A lot of people don't take action because they're not really clear on what they want. They're sending the universe mixed signals. Or on the other spectrum, they have these action takers and they just do a bunch of stuff without actually thinking through it. Like I did. I flipped 3 dozen houses before I woke up and wait a minute. I actually don't want to be an accomplished house flipper. I actually want financial freedom. Yet that is not financial freedom. It took me 3 years to figure that out, right? So clarity. And then number 2 is probably action taking, because you can create clarity under under the palm tree all you want, but it does not necessarily automatically result in action taken. And the key to taking action is clarity on the one hand, but also number 2, being able to deal with uncertainty. A lot of people, especially us engineers, have trouble with that because we surely would like a Gantt chart from now till the end with everything mapped out just precisely. So there's no room for error at all. And that's just not how entrepreneurship works, right?
Yeah.
Really, I have a rule that says just do the next 3 things. This has guided me a lot. It simplifies things a lot. Just do the next 3 things. Everybody knows what the next 3 things are. You might not know what the 26th thing is, but that's not your problem right now. Just figure out the next 3 things, write them down, do those things, and be comfortable with this uncertainty that you can't see beyond, the 23rd item or this. Just do those 3 things. And I think if those 2 things put together will allow people to really accomplish significant things in their lives.
Yeah. And I think just do the next 2 things is so good because I spent a lot of times we can spend so much mental energy trying to solve number 4 through number 23, right? We can just exhaust ourselves with solving problems that don't even exist. So get clarity in what you want to do. By the way, I like how you said spend time on this. Spend time on getting clarity. Don't just say, oh, I think I'm going to do this. Boom, this is what I'm going to do. No, spend time on that, because if you do that, you're going to be more convicted, which will give you the courage to take the action to do the next 3 things, right? And then don't try to solve every single problem. Just do the next 3 things. So I really like that. I want you to step back, Michael, and just reflect. Think about what you're doing. You're having a great impact with your apartments, with your investors, giving them returns, multifamily, but the educational stuff too. Step back and reflect. How does what you do, how does it make you feel?
Yeah, it gives me a sense of purpose, right? So my goal, my intention really is to go to bed every night fulfilled and then excited next morning to get back up and do it again.
That's awesome. How can you beat that, right? I mean, fulfilled with, and then the excitement to get up in the morning and ready to go. And I think there's also things we can do to just getting that clarity and knowing that, I think is so important. So I love that. Real quick, for you, what's going to be the key to your success moving forward?
Key to success. That is a fantastic, is probably consistency. So not giving up, showing up every single day. And I think that's really the key for any success, because, there's going to be setbacks and challenges that you have. Things take longer than you think, and you might get discouraged. But if you've created enough clarity and you're on the right track, then You've got to stay on that track. So to me, it's probably consistency.
Yeah.
The key to success.
Yeah. And I think, again, it goes back to, I think why that clarity, if you're clear enough, you'll have the courage to do the next three things, and then you'll have the courage and just, you'll do it consistently. You'll do it over and again, which is what it takes. I mean, it does take consistency. So amazing stuff. Last question, most impactful book that you have read?
Man, so many. I read so many books. I probably read a book a month, so it's a tough question. If I were to back to consistency, the book that comes to mind is the book called Miracle Equation by Hal Elrod. He's not well known as his book Miracle Equation, which is also extremely good. But the Miracle Equation really talks about a new philosophy on goal setting. And yes, use SMART goals, et cetera. But the only difference is don't put a deadline after your goals because you don't control the deadline.
Yeah.
Instead, commit to the activities that lead to your desired outcome and commit to those activities for as long as it takes, no matter what. And that's a kind of a liberating, and it goes back to consistency. So if you say, I'm going to do a deal by the end of the year. Well, what happens if you don't do a deal at the end of the year? So now you feel discouraged and you might actually give up because you set SMART goals, you did all things, and you couldn't do a deal, which means you're obviously a loser and you should abandon the strategy versus continuing to talk to brokers and continuing to talk with investors so that eventually you get your first deal done and trigger the law of the first deal. So to me, it's a really liberating way to set goals.
It's interesting that you use the word liberating, freedom, and I think it's just that approach to goal setting and taking action. It's very freeing to say, I'm going to do this. I'm going to do this consistently. I'm going to do this over and over again. This will eventually lead to the result that I want. I'm confident of that, but just because I don't get that result every single time or right now, I'm okay with that, and I feel good about it. I'm free from basically you're freeing yourself from the result, and you're just doing what you need to do and doing it consistent. So many good nuggets here, Michael. So much wisdom. I know. I mean, you are the expert in the multifamily space. So many people are learning from you. You've impacted so many people, given them or helped them, guide them to financial freedom. I know that. Just having a great impact. I appreciate you coming on our show so much. How can people find out more about you?
Yeah, so if you want to find out more about just getting active in apartments, looking for deals, putting deals together, we have a free mini course on this thing called Apartments 101, and it's at apartments101.co. And if you're more on the passive side and you want to learn more about investing, then talk to Phil about that.
or talk to Michael, because we were talking before. He has a deal in contract, so Nighthawk Equity. But yeah, there's definitely a lot of opportunities for education, for investing, whatever it might be. Michael, again, thanks so much for coming on for the Moeller Real Estate and Business Podcast. Signing off. Thank you for listening to the Moeller Real Estate and Business Podcast. We hope you found today's episode helpful. If you know current or aspiring investors or entrepreneurs or anyone that would benefit from today's episode, we appreciate you sharing it with them, or better yet, providing us a 5-star review. To learn more about Moeller Real Estate, visit our website at www.moellerre.com. You can also sign up for our newsletter or local events via our website. In closing, I encourage you to be purposeful in all areas of life, educate yourself, network with others that have been successful, take action, and lead. Thank you.